The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as a bit of a wild week in the markets continued on Thursday, stocks rebounding, grains mixed to lower, and livestock lower as well on the day Thursday. Plenty to unpack here. We got a WSDA report coming up on Monday, for instance. We're watching the weather, of course, things like that. Let's talk about it. Joining us now for market analysis, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to catch up with you again. And we were talking a little bit off air. Man, oh man, what a wild week across the market spectrum here this week, Brian.
You bet. Last week things started on the negative side. We'll start with the equities. So it's not grains or livestock, but the equities took a major drop on a jobless report that was, so some pretty big numbers. And then today, not so much. And some of the finger pointing, if you will, or some of the talk was, you had some displacement for Hurricane Beryl, and you had people out of work and whatnot. And so we'll see, but it's been volatile. It's been jumpy. It's sending a signal, though, that volatility is picking up, uncertainty is picking up. You've got the Middle East, which is a powder keg right now. And I think all of us are just holding our breath to see what happens between Israel and Iran now. And what's Iran's measured response after Israel sent a missile into Iran and took out a Hamas leader. So you've got all of that in the backdrop. You've got a dollar that's softened up quite a bit compared to where it was, and then you've got a really good forecast for crops. You've got the entire basically growing region of the corn and soybean belt with above normal precipitation, at the same time above normal temperatures, but some of them warm up temperatures is welcome. It's in the 50s and 60s today in the Dakotas, so the upper states. So just a lot of stuff going on, but kind of the same old pressure on the grains, good crop prospects, not enough export sales. And then over in the livestock, a lot of volatility. I think more worries about economic concerns and whether the consumer can, with sticky inflation, afford high-priced beef.
We'll talk more about that in a minute. I want to focus on this WSDA report coming up on Monday, and I'll frame it up like this and see what your thought is, Brian. I think a lot of producers are starting to have a pretty good idea of what their production is going to look like here this year. And to the supply demand aspect here, we're going to have, USDA with their updated numbers here of their projections for the supply side here as we get into Monday, and some of the demand figures as well. Does it feel like the trade is going to start kind of consolidating and gearing up for USDA adding to the bearish psyche, so to speak, here with a big crop estimate on Monday?
I think if you really look closely, now we had a kind of an ugly day today on the close, and December corn closed at its lowest level in the contract today, under $4, closing at $3.97. But we're still hanging on by our fingernails into a consolidation pattern, and beans are hanging on to $10. But they too broke out of their downside. I think the report, I don't think there's anybody out there that is looking for some type of bullish report, other than there could be a wild card with acreage and what didn't get planted. But you're looking at some of these private estimates that are saying, whoa, the USDA satellite imagery is not showing many acres at all that weren't planted. They got in one way or the other. So I think if you're kind of looking for some sort of bullish number, I just don't know where it would come from. So the market's not anticipating bullish news or a bullish surprise. You never know, but we're not anticipating that. I think what you're going to see, though, is the yield number. If I had to best guess it, the yield number, everybody's looking for a little bit of a chip higher. I'm not so sure they're going to do anything in August. They'll wait till you get boots on the ground, and we're already looking at 181 bushels, but private estimates go 182, 184, up to 188, maybe even 189. So look for a neutral report in corn, and that's probably not good enough in this environment. And in beans, I'm going to look for a reduction in exports. We just haven't sold enough. We've sold some lately. I think that carryout number grows a little bit. If I had to guess, they're not going to change the yield number. If they do, it'd be slight. I don't know why they would change either in corn or beans. These are already high numbers. Now they need to confirm that these are going to be high through various other means, which is boots on the ground. They got plenty of time to raise the crop yield up.
I know with some of these numbers and this bearish trend that we've just been stuck in, we've talked about this, for the past couple of weeks, Brian. In some cases, especially old crop, it's forcing the hand of some folks to have some tough conversations. Maybe they don't have any more storage. Maybe they got to clean out bins to get ready for this bumper harvest that's being predicted. Things like that. And I know we started to see some more cash sales here as of late. I mean, this is just this ongoing tough convo that a lot of folks don't want to have. They might not be able to store and ignore, for instance, things like that. There's so much on the table right now here as we're getting into the middle part of August. This tough conversation is continuing.
And they are, and into the middle part of, I should even say the beginning part of this week, end of last week, corn prices posted a really healthy on the 5th, a really healthy bullish key reversal. And it looked like maybe there could be a little room for recovery. And then the next 6 to 10 day forecast comes out, and you can't get any better. I got to call it as I see it. I don't recall a season recently, at least, where you've just seen one string of forecasts after another that sort of just keeps falling into place. And that to me is kind of the last nail in the coffin. When you've got a really good crop forecast for weather through the mid part of August, I don't see any start to a weather market anymore. If you're told, and if you actually take a look back toward the end of July, the market rallied some, and decent corn was challenging 425 on a hotter, drier forecast. And then it didn't take a very vivid imagination to go, well, geez, if August is hot and dry, that could change the tide. And that flipped. And so we're still stuck in bear market. Just a matter of whether the funds really want to pile drive this and take risk down here, adding the shorts. To your point, farmer selling, we knew it's all year. It's been a plague and a problem in a down market like this where farmers have been hanging on, and rightly so. And now they're going to let go. And I'm going to call it gambling stocks. I'm not going to call it stubborn stocks or anything else. It's just the way it is. It's just time to move this stuff and making bin space. And you see a crop coming at a couple of farmers this week in Illinois and Indiana say, there's not much that can derail us anymore. We've got a really special, good-looking crop, and my corn's starting to dent. It's August 8th. We're not going to get a frost tomorrow, so I don't see anything, knocking the crop off its pegs right now.
That old crop conversation is one thing. New crop at some of these price levels, has some of the new crop marketing slowed down in recent weeks, in your opinion? And if it has, should it, I guess, would be the second part of that question.
Well, that's a great question. I think a lot of farmers have slowed down cash selling because you're just selling into a loss situation right now. And or one that you hope it's your worst sale, but I think that has slowed significantly, and basis is really going to have to do the heavy lifting to get it out of farmers' hands once it's in storage, or the board. But it's not likely the board's going to make a significant recovery real soon until we get more uncertainty, perhaps with the southern hemisphere crops. But I think using paper defensive strategies makes a lot of sense. If you don't want to commit to cash sales or hedge to arrive contracts right now, which commit to a cash sale, how do you defend this? I think you got to use a little creativity. You've got to hedge the board. You've got flexibility. You're not married to it. When I say hedge, I mean selling futures. Or we've been looking at the carry in the market and saying, well, you're going to store. Well, let's defend that March contract with a fence. Let's buy a put, sell a call, leave a big wide top side open. But we'll cap it by collecting some call premium to help finance the put, or sell a couple of calls against one put. Those are all pretty in-depth strategies that need, good advice and good understanding. And so just don't jump at it. Got to understand it. But those are the kind of things that I'm seeing farmers shift to because they don't want to go into the cash market right now. And let's call it give it away in August.
We're talking with Brian Doherty, Senior Market Advisor at Total Farm Marketing, here for today's Market Talk program. Brian, you mentioned it earlier, sticky inflation, some demand concerns in the protein sector. And I found it interesting. It's felt like stocks and livestock have been working in tandem for a lot of the trading days lately. But then here we get a divergence Thursday. Proteins lower, stocks higher. So to your point, maybe we're getting a little toppy with some of these demand concerns out here potentially. What do you think?
I think let's go with the stocks first and kind of talk about very volatile trend lately, and one day up after some pretty hard down days doesn't necessarily win a vote of confidence in the cash cattle trade or the consumer. Um, Two, I think cattle have been fairly high priced for some time, and there again too, Jesse, you're taking weather premium out of that cattle complex. It's been hot out west, but as you get more into the cattle country and the middle part of the Midwest, there just isn't any of that really hot, humid, searing heat that you're going, oh gosh, how are these cattle even going to survive, right? Let alone add weight. It hasn't been a poor summer for weather for cattle. But I think it's just more kind of generalized concern on who's in the marketplace. If you're reading headlines that say, you know, Morgan Stanley or whomever is talking 35%, 60% odds of going into recession by the first quarter, 35% that we'll head into a recession. I got to tell you, those are not the kind of headlines that you want to start buying cattle off of. What you want to hear is robust jobs. You want to hear lower unemployment numbers. You don't want to hear higher jobless numbers or higher than expected jobless numbers. That sends a shiver through the marketplace. That sticky inflation, I call it sticky, that has been problematic, I think, for the cattle industry more so than any other. And it's certainly not the supply side. So I think the overriding arching theme is just kind of what does this look like, and throw all this uncertainty with Ukraine, Russia, Israel, and whoever, and now maybe even our election. Kind of a
Mm-hmm.
revised Democratic camp, and some thoughts. Well, maybe you know not choosing sides here, but one probably isn't going to fight too hard to keep sunset provisions on a lot of tax cuts in place. And you start looking ahead and go, ooh, that's not good for demand.
No, there's a lot of things ahead of us here that could have severe implications on the demand picture, both domestically and internationally too, with our export demand, Brian. Whether it's meat, whether it's grains, etc., and that stock market. I've mentioned this to a few people here this week. Just sometimes you lose sight of it, but how intertwined all of those are. You think about the stocks and the dollar, for instance, and some of the other currencies we compete with, the Bank of Japan, the yuan in China, et cetera, that all has got to work together to create demand for ag products here in the U.S., doesn't it?
Well, it does, and you talk about intertwined. As you sort of look at the way the markets have been this last week, reading quite a bit this morning about how things have suddenly changed on the spread between, let's say, the yen and the dollar, and how the yen was finding a lot of consumers borrowing money to invest in the dollar, and all of a sudden that's flipped upside down. So it just creates ripple effects of uncertainty into the marketplace. Um, you know, I I I don't want to go too far on a limb here. I haven't seen too much of President Biden. I'm not sure where he is, but I got to think, this heightened tension with China and Taiwan, all of these things, in what might be viewed as sort of a absentee leadership, might have some impact on just consumer confidence as well.
Mm-hmm.
And you can't help but think about drawing some conclusions to that who's in charge where and who's running what. So that all kind of compiles to add this uncertainty. And I'm really happy to see the stock market up today. I was happy to see it up yesterday, and it turned on a dime and really punched out pretty hard. So let's hope that it holds up today. I'm not too worried about cattle demand, pork demand diminishing significantly. It's just that what we're seeing is not, as I've been saying all for a while now, we're not developing new demand channels. So we got to rely on our same demand from the same consumers. We're not developing a whole new export market for beef, or we're not seeing that happen. I think there's a lot of wheels in motion that could. I really love the idea of China lowering interest rates. They've done some other economic stimulus things. That all is 6, 8, 10 months down the road, though, before you see those positive consequences.
Very true, Brian. Very true. Well, let's wrap this up and summarize this for us here today. What's your message? Put some perspective on things. What do you want to reiterate to folks as they're looking at their marketing plan and much more here today?
Yeah, so I don't want to say it's time to give up. What I was meaning before was that we have to be realistic on the idea that we're probably running out of a weather market scenario. So we got to shift plans. If you've got a lot of inventory on hand, it's time to start letting that go and biting the bullet on it. If the market goes lower and you want to retain ownership and you know how to do that, you're always one phone call away. You're in a very unique industry where you can own however much of what you sold on the futures market or in the option market. I would say from a defensive posturing, we've got a big report out on the 12th. Let's go into that report. Not optimistic. It's just a reality. We haven't sold enough grain overseas. We've got a good looking crop. I just don't know where a bullish surprise would come from. So I would go paper defensive. So that's my second theme today. And then my third theme is here. Just don't lose sight of the big picture. Low prices do lose or cure low prices, and demand will circle back in. But it's just a tough season, a tough year from a demand perspective. And now we're getting down to what I'm going to call market clearing forces. And those are forces when you see a bushel of corn and it costs more to produce it than you can buy it, somebody's going to own it sooner or later. And the question is, maybe even with all this uncertainty, Jesse, if we don't get a potential where we see a lot of buying all of a sudden just to secure inventory from the foreign market. So things will change. Hang in there. The reality is good looking crops right now and steady to sideways or sideways to lower in price.
Brian, always appreciate the time. Folks want to reach out to you at Total Farm Marketing for a conversation. How can they reach you?
I would ask them to give us a call first, 800-334-9779, and let us listen and take notes to what your situation and see what we can do to help you. And then two, if you just want to shoot an email or have a question, Brian with a Y at totalfarmmarketing.com, or please take a look at our website, totalfarmmarketing.com. Excuse me. And we got a lot of great resources there. So get started somewhere, but we'd love to talk to you.
With that, Brian Doherty from Total Farm Marketing. Always good to chat, sir. Have a great weekend. We will talk to you again next week.
Jesse, thank you. Much appreciated.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.